The Hedgeless Horseman here again, January 28th, 2024. First of all, thanks to my sponsors. In this video, I thought I would cover some recent news and also some companies, and finally talk a bit about how I think in terms of investing, given my background in poker, and how I come to the conclusion, let's say, that this is the most remarkable investing environment I have seen since I started investing in miners in 2015. And go through how I think about risk reward and why I think this sector, contrary to what many people believe, I don't think this is really that hard of a sector if you have a time frame of, I don't know, it depends on the sentiment levels, but I don't think you should lose money over a 5-year period plus, let's say, in this sector. And if you do, you can always fix that. But anyway, let's dig in. First and foremost, I don't know if people know, I have a mining education tab on my website, and I think there's a bunch of good links to videos and some articles, and some are not. There's like Brent Cook videos from 2016, 19, but I think that's still good because you kind of get a sense of, it's like a time machine. You can see, what Brent Cook said 2016 when everything was cheap and all that. Same goes for Pierre Lassonde. If you want some inspirations, like it's not, it's not easy at the time, let's say, for everyone. It's like right now. People kind of make fun of people being bullish junior miners, and to listen to what Pierre Lassonde said in 2016, for example, given that we know now in hindsight, there was a roaring rally in with the start of 2016. I think it's very interesting, and there's a bunch of links. I think there's some tips on how to think about junior investing. Obviously, everyone has their own style. Style of investing and their own, let's say, circle of competences. Like myself, I tend to stay away from, let's say, advanced juniors, like going into PFS or mine building, unless I think the team is great, because it's just too hard. It's like I don't plan to become a mining engineer, and even then it's like, just look at the amount of mining engineers out there that probably don't have a clue when it comes to actual mining investing. Same goes for geologists. So if you only needed to know geology or mining engineering to become a successful mining investor, there would be a lot more millionaires right now, and people wouldn't need to work for the juniors. They would own the juniors. Still, I think it's good to have some basic grasp of things that at least will get you by, and if nothing else, like I covered, on, let's say, disseminated systems, like why Snowline, could have and had such a rapid growth pace relative to, let's say, a typical load gold explorer, which may drill 100 holes in order to prove up or de-risk a fraction of what Snowline can do in 30 holes, that kind of stuff. And some interesting discovery stories for some inspiration, and metals and mining and drilling methods and yada yada, learn about ore deposit. This is kind of on the topic of, like, if you want to earn more, earn it. I watched, I think, all of these videos. I mean, I remember when I started off, I watched a bunch of Brent Cook videos. Tried to, basically learn as much as I could, because I think that it's pretty, let's say, arrogant if you think you deserve to have good returns or even positive returns at all, no matter how long the timeline is, unless you actually, without doing any work really. I mean, I think about investing in juniors for, I mean, most part of the day, and I spent, a few years playing poker, like, playing a million hands, etc., to hammer in the risk reward and let's say bet sizing and all of that. So it's like I've paid my dues, if you know what I mean. It's like I don't know how many thousands of hours I've spent on thinking about investing in juniors, and how many, hundreds or thousands of hours I spent playing poker. So it's like I didn't simply fall into thinking that, hey, I think I can beat this market. No, I've actually done a ton of work. I mean, it's basically an obsession, if you will, because I just enjoy beating the market. I mean, it's not even that much. Well, the money, I was going to say, it's not the main driver really. I just enjoy, I don't know, overcoming challenges, because especially the more people say that you can't make money in juniors, just makes me want to make even more money in juniors, just to prove to myself that I can do it. So you know, I was gonna say, so you're good at something. But that's just the way I am. It's like if I really thought about or looked at the money as money, it's like, what you could buy for it or whatever. It's like it would be hard to do what I do. I look at the money in the portfolio as a game, basically. I don't look at it like, oh, this is worth a punt, and you could have, I don't know, bought something really nice for that kind of money, and then you end up losing it. And it's like, I mean, if I would think that, oh Christ, I lost, whatever, on a punt. I mean, I guess the takeaway is that, like in poker, I mean, the money, etc., are the tools. That's how I look at it. I just want to beat the market. I enjoy beating the market. I'm not really that materialistic at all. I mean, I mean, it's like I don't do a lot of expensive stuff really. I mean, it's not like I have anything against it. It's like I have a $300 watch, for example, which I barely use. It was just a cool watch. Bought it in Japan. Yeah. Long story short, if you want to have better returns, you got to learn more. That's the thing, and that's why it's like my goal with these videos is to educate and get people's mindset straight. Because again, it's like the greatest gift I can give is not a stock pick here and there, because one day that stock pick, even if it's successful, it's like, what do you do then? The ability to be able, to learn to fish is more valuable than to give someone a fish. Of course, preferably you will get both, of course, but at the same time, and that's why I write in my articles, like, you gotta see the case yourself. You can't borrow people's conviction. If somebody says, like, if I'm bullish on a stock, and I write why I'm bullish, you don't understand why I'm bullish, but let's say you copy that. It's like, okay, I'm buying that, and volatility hits, and you have no idea what to do because you don't have any conviction. Maybe, let's say, something goes bad and it goes down, and it should go down. I mean, you that's when you should, like, again, have a case. Like, did this change the case enough? Because some dips, like let's say a 50% dip in some stock is a clear buy, whereas a 50% dip in another stock, it might be a still or might all of a sudden be a sell, because the case went down a lot in, risk reward, despite the 50% price decline. And of course, it might not necessarily be a clear sell, but still, if you take a 50% haircut, and yes, it became cheaper, but the risk reward is not as good as some other cases of, then it's a sell on a relative basis. So it's, from just value shuffling, that's still a sell, even though it might not actually be a bad bet per se. Maybe you can expect to make 50% in that. I mean, who knows? But relative to, if you have a case where you think the base case is that, if I play the infinite amount of those cases, I expect to make 200% on average. Obviously, you should still sell the one that's down and buy the other one. Things like that. But again, it's like you are the only one that's going to stay with yourself forever, and you're the only one that's going to have access to your portfolio at all times, etc., etc. So, I mean, you really want to be able to navigate the markets yourselves. Then that's was my first priority. It's like when I started out, nobody knew who I was. I didn't have any experience with mining, or not in mining investing, or anything like that. So I learned from scratch, and I wanted to learn from scratch because I wanted to be able to fish for myself, because I understood that, like, investing in let's say there are not too many skills that you can actually build on through your entire life, and which you can use for your entire life. If I get better at basketball, I'm still gonna have to retire one day. I can't. It's an age thing. Whereas, like, I would assume Warren Buffett is better than he has ever been, perhaps. And Munger, before he died, probably was at the peak of his investing skills. So, if you learn quickly and add a few percent in expected return per year, that's going to add up a lot, especially if you can compound that or add to that every year. So let's say you become 5% better at investing every year. It's like in 5 years you're going to be quite a bit better than you are today, and that's going to help your compound for the rest of your life. And if you keep getting better and better, it's like, compounding on compounding, if you know what I mean. Anyway, another thing. Right now it's pretty obvious. It's like your competition out there is either out of office, sleeping, or broke, and almost everyone is afraid. Empty. There's no volumes really. There's no volumes out, record low volumes. So there's not even anyone that's out there listening, reading the news releases. Or they are simply asleep at the wheel, fearful, can't make a decision. They've been burned so many times they can't get themselves to buy. There, a lot of people I see write, I'm waiting to see some signs of life before I buy into this sector, meaning they prefer to pay higher prices if it makes them think that they won't see any lower prices. So that's a psychological crutch, obviously. To me, it makes no sense that if you know something is unsustainably cheap, that you're gonna, on average, make a lot of money on, that you don't buy that because you can't stomach a price decline. In that case, you trade like false safety, I was going to say, for lower returns. That's how I look at it. And yeah, out of office, sleeping, or broken, almost everyone is afraid. So it's like, what are you required to buy? What is required to buy right now? Obviously, you have to be at the office. You can't be sleeping. You actually have to read the news releases and just don't throw your hands up in the air and let's say, I'm not even going to look at the news or look at the portfolio, not going to do anything. I mean, you could do that. At least you might be able to hold on, and you can hope that you actually have some decent to good companies in your portfolio. And I wouldn't be surprised if within a few years you're probably going to be up a lot. I mean, you can do that. But then also it's like you can't be too afraid either. So it's like when you think about it, it's like there's almost nobody in the sector, no new capital coming in. They might be sleeping, not watching the news. It's like have gone into hiding. Some are obviously broke, like myself. I'm fully invested at all times, so I have to take from some position to buy another position, which is not any net capital gain unless I actually obviously get money to put in, which I do as soon as I can. So yes, there's actually some, from me at least, there's some net capital added to the sector pretty much every month. And again, almost everyone is afraid, so you can't be, if you're too afraid to buy, you won't be buying. If you're checked out, you're not buying. If you're asleep at the wheel, you're not buying. If you're broke, you're not buying, yada yada. So there's not many out there who are buying. And that kinda, you can see that in some cases, I think. Here's like Altamira, for example, had a pretty busy last 6 months or so. Here this is one of those stories where it's like the fundamentals have just been going up. Altamira Gold continues to expand intrusive hosted gold discovery at Maria Bonita. That's kind of their primary target right now, which they are drilling. Before that, Altamira Gold defines additional porphyry-style coincident copper and magnetic drill targets at the Santa Helena project, Brazil. Altamira announces non-brokered private placement of up to 2.5 million, more than 100% upsized, and then it got upsized again. And then we learn Altamira Gold identifies strong magnetic anomaly coincident with gold in soil anomaly at Maria Bonita discovery. And if you look at we can look at it later actually. Altamira Gold announces recommencement of drilling at the Maria Bonita intrusive hosted gold discovery Cajueiro, Brazil. So drill start, and the last one, that should be here. Okay, appears not to be in here actually. Oh, okay, for some reason I couldn't find. So this is the latest news release from Altamira. I talked about this on the K report. Altamira Gold adds second diamond drill rig at Maria Bonita discovery, Cajueiro project, Brazil. In this market, if you hike expenses, you probably do that for a very, very good reason. I mean, they are cashed up, so it's not like they're running on fumes or anything like that, but still, when you tend to not get too much for it, given that, again, there's almost no buyers out there to even react to positive news. So they're adding a drill rig. And as I went through in the K report, the plan was to drill 100 to either 100 to 150 meters or 120 to 150 meters, unless they hit some quote kind of feeder zone. But I think they would do that later on. So I think it might have been conditional that if they hit a feeder, they'll keep drilling, whatever. But the plan was to do a bunch of short holes first and then follow up if they hit what they thought could be a feeder. So I mean, adds a second drill rig. It's like, I mean, they could have added a second drill rig immediately, right? But here we kind of, know why. Drilling has restarted at the Maria Bonita project following the year-end break. Drill hole 10, I guess, is currently at a depth of 228 meters. So the first hole they drilled, with the help of, the magnetic anomaly that was announced earlier, etc. That's already overshot. Well, I mean, I don't know what depth it is right now, but around 100% longer hold than planned already. And in the same day announced a second diamond drill rig. I mean, this is one of those like, hello. Without getting assays, this is probably the best possible news you could get from Altamira before assays. Obviously, because unless, I mean, I don't know, try to come up with something that they got bought out or for some reason, or minerals, I mean, they recently put in a stake. So I mean, from signal value, this is basically as good as it gets. So whatever the chance of success was that Maria Bonita could be something meaty, or the first shallow drill holes were not one-offs. The chance of success of them this being the real deal jumped on this news. So obviously, whatever risk-adjusted value you would have for Altamira, you would increase that risk-adjusted value now, because this hikes up the chance of success. So if you thought it was, I don't know, it's like, whatever, 25% chance that this might be 2 million ounces or something or more. Maybe this makes it go to 35% or something. That's a 10%. That's a $20 million jump in risk-adjusted implied value in that case. And here we have the copper porphyry targets, which seem to be very good. Here you have the copper in soil anomaly, which is the white lines. I mean, obviously there's a copper anomaly here, and they have, I mean, if you go through the news releases, etc., I mean, there's a bunch more slides, and it's like I've talked to Michael, and he really, I mean, this basically, the geophysics basically show what you would want to see. So here you have a shot at they have three different porphyry targets just here at Santa Elena. And if you listen to, I mean, the copper people like Robert Friedland and stuff, I mean, they're expecting, and you can see the banks come out now and say that they expect a small surplus in copper for, I think, Q1, but Q2 to 4, they expect deficits. And if the projected demand and supply trend, or the years after that, basically is very incredibly favorable for copper. And I know that Warren Gilman guy, he thinks that 2024 is this year is the last chance you have to pick up copper in a copper stores in a generational opportunity. With that said, obviously Altamira does not have any confirmed copper porphyry yet, but should this have any value? I mean, if we just think about, okay, they have this in their portfolio, 3 nice copper targets. Fast forward 1-2 years, let's say copper is on a real run. Then we have obviously the risk of success here, that they drill this in a favorable copper environment and they make a discovery, and you're not paying anything for that right now. So even if, in my opinion, even if there was a 0 chance of success here, I think Altamira would be cheap just based on Maria Bonita and the current resource. So yeah, it's like, okay, we know, I mean, very encouraging news release. January 16th, I think. Yeah, January 16th. Did it even move? Open 0.65 low. So it went higher by like what, 6 cents or I mean 5 cents? No, half a cent, right? Half a cent. I mean, this is just absolutely crazy. Um, it's actually lower now. It's actually, I'm just gonna see here. I mean, they have diluted a bit, like 31 million. What's that? Excuse me. What's that pricing in? Anywhere close to having something worth mining? No, absolutely not. And they're hitting. I mean, the shallow holes. Actually, let's see if we can see. Oh yeah. So this is the geophysics. This big blue blob here um, is what they think might correlate with an ore body. That's a pretty big blob. This is 100 meters here. Interestingly enough, if I remember correctly, these holes here you see that go out, and it's like, yes, it's kind of colored at the edge of the dark blue. These were the holes that didn't really hit anything. All these holes here hit something. So I would say that kind of lends credibility to the fact that it might actually be this dark, especially dark blue geophysics here, that is the correlates with the ore body. This is the hole they're drilling now. I guess it's colored actually in a bit of a lower, but still, I mean, let's say it's at least teal, and of course it's not too far off from the other holes. But it's like, and they're drilling quite deep, and they've come this far and keep drilling. I mean, it would make sense. Let's say the ore body starts here. I mean, it's hard to say because obviously this is like a 2D picture. But still, I mean, yeah, you can play around with some tonnages here. And who knows? I mean, if they come out with like I'm just, I don't know what exactly they saw and are seeing in this drill core, but if they come out with like 200 meters of 1 gram per ton, it's like, can you imagine how cheap, how good of a mine this could become? I mean, if you look here at the highlights, like from 0 meters. I mean, there's like the first 55 meters someplace, that's 1 gram per ton. 50 meters, 1.1. I mean, these are the highlights, obviously. Like 69 meters starting from surface. I mean, who knows? Even this 45 meter of 0.31 might be doable, or close to cutoff rate. Because it's like there might be almost no strip to this deposit. If there is, I'm not saying there's for sure a multi-million ounce gold deposit here, but if it's, let's say, around 1 gram, multi-million ounces starting at surface, here in Brazil, it's not up at some mountain or whatever. It's like there are a lot of companies that have mines in Brazil that are doing just fine. And yeah, I can't speculate too much, but it might not look too sexy, but I would urge people to think about what a, let's say, almost zero strip ratio mine with 1 grams per ton multi-million ounce could be worth. Of I don't know if everything will be oxide, let's say, but yeah, I mean, just so you know, it's like many of these stories are much more bullish in private than I let on in public. I think, I mean, thing is, almost nobody believes me anyway. Obviously, it's like I mean, to me, this is one of those obvious cases, and when you have the market, I mean, in the eyes of the market, this was apparently a nothing burger. It's actually cheaper today, and this brings me back to, how can people have the nerve to call this a hard market? Where the heck do you expect to be able to see opportunities like this? I mean, this is basically as bullish of a sign they can give the market signal value-wise without actually having assays. If that is worth absolutely zero, that means that every single person knew about it. The funny thing is that given that they don't even have assays, there is zero chance the market knows what that hole will grade. So it doesn't add up at all, and that's what I'm talking about. This market is so incredibly inefficient that it's absolutely ridiculous. We should not be able to get bets. We should not be able to see stuff like this. I mean, it literally is like investing as an insider. I can pay a lower price today than before the positive news came out. Because there is nobody in the market. Might be some, who knows, there might be a forced seller or whatever. It's like there's not enough buying. And that's like, this is just one of many examples of the market being absolutely brain dead. And I personally, I am in no rush to see any of these stories really go higher, because this is like, if I get one shot to invest in an environment like this once every 5 years, you better believe this might actually, I mean, this environment might be the best in 8 to 20 years or something. I'm in no rush to see these opportunities disappear. If I get 6 additional months of buying cases like this, which the market is completely sleeping on, my long-term returns are going up with every additional dollar I can put into this market right now. Because the bets are absolutely bananas. Yeah, I don't really know what to say. That's why it's like, I don't think, when you really think about it, it's like, how on earth can we call this market hard? I don't know what makes people think it's that hard, because again, well, I guess most people see this as positive news release. The share price didn't react. So they might actually be more inclined to sell because they don't see other people buying it. When you think about it, that's probably how people actually work. And it goes back to what's common sense here. If something went up in implied value and price doesn't react, is even lower, is that a good or a bad thing? That's a ridiculously good thing for anyone with money, let's say. Then it's like, I just thought I would touch on Inflection. I think this is also one of those sleepers. You can see the volume is almost, this is not much. I mean, it would take me perhaps weeks actually to sell my position in this one, and I kind of like that actually, because I have no way of getting impatient and selling really, so I'm forced to just hodl. So it's like the market has made a decision for me. Thankfully, it's like, I really like this story, I really like the team, there's a lot of skin in the game. They have probably the most impressive technical team of any junior I've ever seen. So if there's one junior, I think, where it's like time is your friend, it's with, people like this. And you can see, I mean, what's this? 10,000 shares. I mean, think about if somebody would put in a buy order of $100,000, like a market order, it's like, these stocks, like Inflection Resources, for example, we can't fathom how much some of these could move when things change, either by positive news or sentiment, and or preferably both, actually, if we're done buying, of course. Because again, if you look at the share price, like I mean, since August topped out and it's like trending down a bit, but when you go through the news releases, they hit Chalco Pyrite and Bornite at Duck Creek and Fairholm. They have Chalco Pyrite and Molybdenum at Miamundi. So they have found increasing smoke. I mean, Bornite is both of these are high grade copper minerals. So there's obviously something there. What that is, I don't know. Is it big? Does it have grade? How long will it take them to find it? I don't know. But they have a huge amount of targets. And the easy bet that I outlined, and quite a while ago, that I think there's a reasonable chance that when all is said and done, they will at least have made one discovery. Here we have the latest one with, a month old now, Crescat, Quinton.
Okay, this shows you their land holding over here on the left-hand side, those orange blocks, that's their tenements. And notice how they're extensions of the gray to the south. What is the gray? That is terrain where these mega porphyry deposits are found. Cadia is an absolute monster deposit. Okay, huge porphyry copper gold system. North Parks is a huge porphyry copper gold system. Cowell is actually a huge gold system. And even like Boda has found a big deposit there, and there's other ones too, like the Triton thing as well. So, look, this is elephant country. All right, now these guys just stake tenements over the covered area, the light brown up in the north there. That is all covered by thin gravel horizons and stuff, and they're drilling through this. They're drilling targets through this in hopes of finding a big deposit, like you see in Outcrop to the south. Let's go to the next slide. Look at how many targets they have there. This is jaw dropping, okay? And they are going to drill these things. They are systematically drilling these things. Anglo Gold is committed to drilling. I think it's like 30 or 35,000 meters as a first pass, which is wonderful because that means Inflection doesn't have to spend their money. Anglo's taken on the burden of spend, but they are testing an absolute smorgasbord of targets. All of these.
Yeah, so I mean, the gist of it, I mean, a lot of the juniors, the bear markets are a perfect storm because many of them need to raise money, and when people know they need to raise money, they get sold off, yada yada yada. In this case, it's Anglo Gold that's footing the bill. I mean, they have their targets of their own, and they have a few million in cash, so they can do some work themselves. But Anglo Gold is footing the bill of testing all these targets. And again, at Miamundi, Duck Creek, and Fairholm, which they drilled. I mean, they have already killed a bunch of targets. You can see like targets discarded, the black ones. And then there's obviously different priorities to some targets, but like there appears to be something potentially at Miamundi and Duck Creek and Fairholm. And it is trading for 15 million Canadian. Again, I have no rush to see this sector get its brain back anytime soon, really. Problem is, of course, again for me, that this is not the only one. There are so many, in my opinion, absolute no-brainer risk rewards that I simply don't have enough. I mean, I would like to, quadruple my positions in some. Problem is that since I also want to have the benefit of diversification, because let's say if you think Inflection is undervalued by 200%, and then maybe there's a few that you think are undervalued by let's say you have two that you think are undervalued by 250%, and let's say they are high risk, high reward. Yes, on an expected value basis, your portfolio has better expected return if you only own the two with 250% expected return. Problem is, if those are high risk, high reward stories, it might still mean there's a, let's say, 70% chance that both do not work out. And in case they actually work out, they might go up tenfold, etc. But that's not something we want. We want to make sure, because from a compounding perspective, you can't compound a loss. And from these ridiculous levels overall, it's like you don't want to be all in two stories that are high risk, high reward, unless I can't come up with some, if there's like they're truly unique or something, and that you're pretty much gambling, or you have like $1,000 or something that doesn't really matter, maybe in that case. But otherwise, if I had, let's say, 100 Inflection Resources opportunity out there, I would, in order to capture the undervaluation that you see and diversify away the company risk, because let's face it, if Inflection makes one discovery, a good one, and we go into a copper bull or whatever, I don't know how high it could go, 20 bagger, 30 bagger, 40 bagger, who knows, right? So it would pay for a whole bunch of failures. So if you had 100 of identical cases like this, you'd make sure that at least some of them will be successful, instead of like, let's say you go all in on Inflection Resources because yes, you think it's very undervalued, and if they actually make a discovery, it could go up a lot. But at the same time, it's not like there's 100% guarantee that you're going to make a 20 bagger in Inflection Resources. Let's be real. But I think it's so underappreciating the chance of success and or the reward function in case of success, that I think it's a no-brainer from a mathematical perspective. But let's say the chance of success is 20%, that they're gonna make a 20 bagger. If it's 20%, you would on balance need 5 identical stories in order for one of them to statistically work out and pay for the other 4, right? If you have 100 of them, you're gonna be pretty sure you're gonna get close to the, let's say, expected value, that portfolio will actually reward you 200% if you are somewhat accurate in your expected value guesstimate, if that makes sense. It's like I'd rather play, if I had 100 hands of aces, I'd rather put 1% on each aces and get close to 82%, which is the average win chance for aces. You kind of make sure that you're gonna win close to 82 out of the 100 hands, instead of just betting one hand with everything you have on aces, because there's still in that case an 18% chance you're wiped out. But there's no way you're gonna be wiped out if you play aces 100 times. You're not gonna lose with aces. The probability of that is so infinitely small that it's just not gonna happen. You're probably gonna win close to 82 times actually, and double up in 82% of the cases, and 18% of the cases you're actually gonna lose money. So I hope you get what I'm saying. It's like you're diversifying the company risks, so you're getting closer and closer to actually getting the expected returns from a risk-adjusted basis for the overall portfolio, even though there's going to be a lot of, again, misses and it's like hits and all of that. Anyway, it just made me think like the Javieron project, Greatland Gold. Greatland has a market cap of 1.1 billion Australian. They own 30% of this Javier project, which of course, I mean, it's not I don't think it's a copper porphyry, but still, it's like here you see base of Permian cover. So it was in fact a blind discovery. It didn't outcrop. I don't know. I can't really see the. I don't know what the mesh is. I mean, I don't know how thick the cover is, but this is basically what Inflection is doing: drilling holes undercover. And one last thing, again, going back to the balance of probabilities and all that. And I've talked about this before. I recently watched a video by Stuart Smith, who is an expert on porphyries. He is on the team of Inflection Resources, actually. And there's like a 1 hour presentation where he goes through how the evolution of understanding porphyry copper deposits has evolved. And he's an expert on New South Wales especially, which is thankful because that's where Inflection is. So he's a brainy guy, and anyway, it's like in one segment he goes through the fact it's like copper porphyries around the world, they are not spread out evenly or anything close to that. Like Chile, for example, has huge endowment, and there's large parts of the world that don't have a single copper porphyry, for example, not a large one. So for some reason there are giants there, and within Chile, majority comes from just two belts or two segments of that mountain range, let's say, which points to the fact that when these show up, they show up in clusters or trends, whatever happened there made a bunch of them, pop out close to the ground and are obviously not eroded away and all that. Which is good because I think it speaks favorably to Inflection Resources because this part of Australia is, as far as I understand, is the only place in Australia where anyone has found giant copper porphyries. Okay, so if we think that's like, okay, where one is, there's probably more, and we can see that obviously here. Here's Cowal, here's Cadia, here's North Parks, Tomingli, Boda, which is also a discovery. So if we know that, and we see the evidence of that, here you have the Janine, Narromine, Molong volcanic belts. Okay, that's the dark shaded stuff. And you can see the scale bar down here. It's like, I don't know, this is like, what's that, like 75 kilometers. This might be 60 kilometers, whatever. So if you patch them together, that's, I don't know, 130 kilometers of strike or whatever. And then you look at the stretch of covered ground where Inflection believes this same belt is residing, but under cover rock, Permian cover, or whatever the age is. Based on the balance of probability, if it's the same geology that's running all the way through here, we have three big deposits over 130 kilometers. If they have like 250 meters of strike of this same belt, balance of probabilities would suggest that there is indeed, well, if we just go straight off, it would mean that, I mean, this patch here probably would have like three of these deposits and more than that. So I think there's actually a pretty good chance. I mean, obviously it's up to interpretation and stuff like that. I mean, is this continuation actually, exactly here, whatever. But they did do a lot of, high up geophysics, etc. So it's not like they just staked whatever ground. They staked pretty much every single feature that could be explained by a big porphyry system. They are not after small system. They're looking for big features that could be large porphyry systems. And you hear Alistair, he has said as much. There's like, they already have a filter that it needs to be large targets, and then you see how many targets they have. So again, balance of probabilities we should really not be surprised if they're somewhat accurate that the geology does indeed go like that, and judging the amount of targets, etc., and knowing the endowment of at the outcropping strike, we should not even be surprised if there's like three porphyry deposits here. But with that said, it's undercover, takes longer to find, obviously, harder to drill, and who knows, some might be too deep. Maybe there are like 2 or 3, but maybe 2 of them are actually too deep. Meaning that's like, if you just look at it over this entire strike, there is one here, but it's like at 2 kilometer depth or something. And it's like, no, that's too deep actually. And they might never find it. But still, it's like, again, from balance of probability standpoint, given what we know about how porphyry deposits show up, and we already have confirmation that it can produce very large systems like North Parks. I think that has a bunch of porphyry clusters, and it's like Duck Creek. Within that, there's a bunch of targets. So it's like, yeah, they have, I don't know how many. Is it like 24? I don't remember. I counted them before. Maybe 24 target areas. The funny thing is that I think a lot of these target areas have multiple actual targets within the areas. I think, if I remember correctly, Duck Creek has like, or had, I mean, they've tested a few, I think, but like that had up to like 12 targets just within Duck Creek. So combined, there might be like 100 porphyry targets here. So it's like, what are the odds that all of those geophysical signatures, etc., is not explained by a single large copper porphyry? Personally, I think it's way above, let's say, 10% chance. Maybe I'm actually leaning towards 50% chance, but that's just at face value. Of course, there's another thing of them being there and then finding them and them being economic and all of that. Still, I mean, we go back to the inflection. It's like, whenever someone says, I mean, there's always excuses to sell cheap. It's like, I mean, you see it all the time that, well, it's cheap, but like, I don't know if they're gonna hit something. It's like, well, of course we don't know if they're gonna hit something. Just look at what's priced in. I mean, it's pricing in no chance. Greatland Gold reached, I mean, well, first of all, 30%, but still, it's like they have 30% of the Havieron project, which is undercover and deep in Australia. They have a 1.1 billion market cap. Inflection is currently at face value, non-undiluted, pricing in that. And then, of course, you have to kind of adjust for that, Havieron has, Greatland Gold has 5% more of the project, not 30 instead of 25. Still, let's say 1.5% chance that they will find one deposit that's somewhat similar to the Havieron project. I don't know nobody knows what the actual odds are. It's like Mother Nature knows. It's there or it's not there. But based on what we know, I find it very hard to believe that there's just 1.5% chance. Because it can also be even bigger. Of course, like look at Cadia. That's way bigger than the Havieron project. So yeah, I mean, yeah. So again, it's like I don't think people fully understand how bullish I actually am on some of these stories, and I think most people don't, or some reason I don't know. It's like I can't believe we get to have bets like this. You will never ever see bets like this in poker. Never ever. That's why I don't miss poker, because I think the junior sector is, I don't know. Let's say it has some of the worst players I can ever imagine. I mean, you don't meet, even if you kind of played micro stakes, you probably won't have opponents that are this bad. Well, again, most opponents are not even here, or if they are, they're too afraid to do anything. Brixton Metals, also one of those funny ones. It's like I recently talked about it on K Report. Why it doesn't really add up. It's like it was trading at the time for, I think, 51. It's up a bit, but 51 million Canadian with 16 million in cash. So there's 35 million Canadian in market cap. I think I started on a small article. Yeah, I mean, just flushing out the numbers, etc. It's like at the time, it's like BHP had a market cap of 234.7 billion. I don't know what kind of project they would need to see for them to care. I mean, what kind of potential they would need to see. Or, basically that. Like, what would move the needle? What would be worth their time? If it's like 2% of their market cap, 2% value addition, which doesn't sound like a lot, honestly. But that's still 4.7 billion Australian, which is, I think, around 4.7 billion Canadian. I was going to say that kind of rhymes. I mean, look at, is it BHP or Rio Tinto that's in Philo? I think it's BHP. They have a market cap of around 3 billion. That's a world-class discovery. That's like a BHP type porphyry, unlike Philo. Obviously, this is British Columbia of Canada, not 5,000 meters up on the border between Chile and Argentina. I can't imagine how many hurdles it's got to be to get that through. I mean, I think Brent Cook said he doesn't think that's going to be built in the next 20 years, for example, which says something. And who knows how Argentina or Chile will look in 20 years. If you would find something of that magnitude, or even half that magnitude in Canada, I think that could be worth a lot. Just the security of knowing that you won't have, I mean, what you buy is not going to be stolen or nationalized. Because these mines can have, I mean, I don't know what Philo Mining, their project would have in terms of mine life, but let's say 50 years. I mean, 50 years of, 50 years being at the mercy of Chile and Argentina, which basically has a revolution or goes bankrupt every 2 decades or something. I mean, I don't know. Well, I'm exaggerating a bit, but you know what I mean. It's like, would you want to own something there where it takes 50 years to retrieve the full value? I mean, maybe it's such a good deposit that it actually pays itself back in the first, I don't know, 3 years. It's like, so it might be actually more than that, but, and I don't know, but you get my point. It's like, obviously, if somebody gave me a mine, it's like, this is yours, everything, every value you get out of this is yours. Obviously, I would want that in a tier 1 jurisdiction where I think actually that my, let's say, my children or even grandchildren could get use of it, not in some if I could choose, I would prefer it to be in Canada, for example, which seems to be the literally premier jurisdiction right now. And if we look at the share price, I mean, it doesn't take a genius to see that this is pretty low. And back to my point here, it's like, okay, BHP again has a market cap of 234.7 billion. if we assume that if we assume they need to see something at least worth 2.35 billion, that's, or was, I mean, market cap was a bit lower here, 4 million lower. That would still have been 46 times the current market cap of Brixton. That's undiluted though, which has to be noticed, maybe 40 times, I don't know. But obviously there's like almost no chance in hell priced in that this Camp Creek is actually going to become something worthy of BHP. Because if BHP thinks if there's a 10% chance this is a BHP type target, or there is going to be a BHP type price proven, maybe after they use the 16 million in cash they have right now. I mean, if again, it's like what I'm trying to say is that you saw what happened to Hercules Silver when they hit a potential discovery hole. It ran up to 350 million after an investment was made by Barrick, and Barrick is, of course, I think Barrick has a market cap of 35 billion or something. So BHP is 10 times larger than Barrick, around that at least. So one should be 10 times more excited to see BHP come in. I mean, all else equal. Still, Brixton recently had a market cap of just 51 million, whereas Hercules recently ran to 350 million. I'm not saying necessarily that, you know, Hercules, especially now that it's gone down, I don't think it is overvalued at all. Still, I think the pessimism in Brixton is obscene, because they also have a joint venture with Ivanhoe Electric on their Hog Heaven project. And the last news release from Ivanhoe Electric said that Hog Heaven is, fast becoming our most exciting exploration project in the US. I mean, that might be, fluff or whatever, but it's like they're drilling there right now, I'm pretty sure. So it's like it can't be all fluff. And then one has to ask, okay, if they earn fully into that, they give some cash and stuff to Brixton, and Brixton gets to keep 25%. So if we think, okay, Ivanhoe Electric, that's Robert Friedland. Let's say, well, the founder of Diamond Fields that discovered Voisey's Bay. They discovered Oyu Tolgoi, which I think is the largest operating copper mine in the world or something, or second largest maybe. Voisey's Bay was one of the biggest successes in the last few decades. It got sold for $4.3 billion. That's how he got rich in the first place. They obviously have Kamoa-Kakula in Congo, I think, which is one of the largest copper mines in the world as well. And Platte Reef, and maybe some more. I don't remember. But the point is that whenever Friedland is involved, he's looking for billion dollar projects. So I don't know what the chance of success is that they're gonna prove up a $1 billion deposit, $1 billion plus deposit at Hog Heaven. But if Ivanhoe Electric is actively doing work there, they think there is a chance. Maybe that's 10%, maybe that's 15%. I mean, according to them, who would know? I mean, better than me. It's not zero, that's for sure. It's probably not 5%. Maybe 10, okay. 10% of 1 billion is 100 million, and 25% of that, which would then go to Brixton. I think I'm pretty conservative here. That's still 25 million. So if you take away the cash in Brixton Metals, it's like, well, now it's, I guess, 39 million. But if you take away, let's say, maybe 25 million for, let's say, 20, even to be more conservative, that's like 20 million for Camp Creek, their other projects, and all the other targets at Thorn. That is no way, and nobody can tell me that's a fair assessment. But I know there's, what was I going to say? I mean, the share structure is not right, or it's not the best. Obviously, we're close to 1 billion, half a billion shares outstanding. But the thing is, people didn't think Hercules was going to run because they had quite a few shares out. But you can only imagine. Okay, I'm not saying it's going to happen. Far from it. Imagine over the next 12 months, Brixton Metals drills, I don't know, 15 holes, 15 deep holes. I have no idea. 20 holes, whatever. Let's say they hit, they find where the actual sweet spot of that porphyry is up there, because they are hitting a lot of smoke, that's for sure. Do we have here? Okay, so they have 821 meters of 0.48. I mean, these are really nice holes. It's just that it's deep and all that, and it's like at those depths, maybe, 150 meters of 0.87. That's pretty good. 380 meters. So it's not like they haven't hit anything. But it's like the thing is that if I remember correctly, they are hitting like fingers of the porphyry, let's say. Let's see if we can see that presentation here. And obviously here you have this is the thing about long-term investing. It's like the market is short-sighted as hell, even more so now than ever, I think, because I think I saw a graph of the average holding period of stocks is the lowest it's ever been. So you know that people are short. I mean, everybody jumps from the next catalyst to the next catalyst, basically. So if you have a longer term horizon than the market, that's easier than ever because it's more short-sighted than ever. If you have a 1 year time frame, I don't. It's like if you only stick to that when you invest, what you think is actually cheap on a 1 year basis, I think you're going to crush the market just based on that. And I mean, sure, you have to. It's like, you can't just buy any crappy junior which doesn't even have a case and just, well, if I wait 1 year, I'm gonna make money by definition because I have a longer time frame. It's like you have to have a reason for the longer time frame. But here you can make a pretty good case that according to at least some analysts and Friedland, etc., they're expecting higher prices of copper this year, and it's just going to get absolutely worse. This is 23. I don't know how exactly accurate this is, but they do expect shortages already this year. Deficit. I'm not saying shortages, but deficit. Okay, that they're eating into, let's say, inventories. But that's expected to get worse and worse and worse. I mean, the funny thing in this case is and that's why copper is some people's absolute favorite metal. For the people that have a time frame of more than a year, or maybe even a year is actually good enough. But it's imagine if you bought up all the somewhat advanced copper projects right now. Fast forward to 2027. Let's say you buy them for peanuts now. Let's say this happens. We can only imagine what the price of copper will be and what the value on those copper juniors will be. Anyway, fast forward 1 year, maybe copper has gone higher, maybe the copper bull is in full swing, let's say. Let's say some juniors are up 100%, people are feeling pretty good, and people think it's going to get even better. I mean, that's typically what happens because of sentiment. Anyway, and within the next 12 months, they drill, let's say, 20 holes or 15, whatever. And let's say they come out with, where is it? Let's say they come out with, here you have model Porphyry X. So let's say they come out, they find the meaty part where it's like, together or whatever. They get a lot of Porphyry X, and they come up with 700 meters of 1% or something. I mean, yeah, theoretically it could obviously do even better than that, but let's say 700 meters of like close to 1% instead of like 350 meters or close to 1%. Let's say 7. They actually hit the guts of the system, or a high grade core or whatever. Can you imagine in a hot market if they drill a hole like that with BHP in, where this market cap would go? We know that Hercules was able to go to 350. I mean, there's context there. There's like, okay, is this a super gene enriched zone they're hitting and all of that, and that got kind of, it's like took a turn or a hit or whatever. So yes, it's not apples to apples, but still, it's like, imagine a pretty good copper environment, and they drill something that makes people think, hey, this actually might be a BHP type price at a time when more and more people are starting to believe that copper is going to shoot through the roof. I mean, we have no idea where Brixton could move in that case, and what's the chance of success needed for that? I don't know. If I had 10 Brixton Metals and I bought them all at 55 million market cap with BHP in, is it out of the question that one could go up 10 times to, like, let's say 600 million? No, I think, I mean, again, if it's BHP size, that's going to be like 2 billion or something. I'm not saying it's going to trade to that exactly, tomorrow within next year, but you get my point. If this turns out to be a BHP sized system, this is going to go probably a heck of a lot higher than 600 million, especially in a hot copper environment. And in that case, it will already have paid for the other 9 Brixton Metals that went to zero. And there's also upside that it could go even higher than that, let's say 2 billion. I mean, we're talking, 30 baggers, etc. And then you need to be right one in every 30. And if the other ones just go down 50%, then you need to be right one out of every 60 times, etc., etc. So I mean, from again a expected value, risk-adjusted basis, the valuations we see out there makes absolutely no sense. The bets are too good. The reward function is too good. The risk is always 100% down. But now and then the prices of the bets get so bonkers that's like, I mean, I don't know, again, no idea, nobody knows what the actual blue sky is, but let's say, well, that's not even close. Well, let's say this is blue. No, let's say 10 times. Let's say like 1.2. Let's say $1.2. That's still only like, I mean, on basic market cap, that's right now would be like 550 million, which is certainly not out of the question. So up here, you had 100% downside and would get 288% if it turned out to be worth. I mean, they have diluted since, so it's not exactly apples to apples, but the point being that when price goes down, again, downside is always capped. So now, if they would prove up something that the market within the next 3 years would at least deem to be worth, let's say, 600 million, that would be an almost 900% return. And if you think you need even, if there's a 50% chance of that happening, Brixton is immensely cheap, especially given that from this valuation they again still have Hog Heaven, which is worth something for sure. They have potentially Trapper, and they of course have Metla, they have Langis, and they have the Eitling Goldfields. I mean, just imagine, if I remember correctly, one of these rises here, I don't think it's maybe actually up there, but I remember I was excited about Brixton when they only had the Langis silver deposit. I think it reached a market cap around where it is now, actually, just from that. So imagine, silver market takes off, what they can get for that project, for example, because I think it's a pretty decent project, actually. So it's like when you account for all the potential monetizing events from their very large portfolio, together with the fact that they have 16 million and drilling a BHP type target, the risk reward comes out pretty favorable, to say the least, in my opinion. So yeah, I mean, I don't know what the chance of success is, but I do know that if the copper market starts to heat up and they hit a hole that gets the market's attention from this market cap, from this valuation, we will not be close to this valuation in that case. And you don't need even 50% chance of that happening for it to be a pretty good bet. Yeah, there's a bunch of other ones. I already talked for over an hour. That wasn't even the plan. Well, and I didn't even get to my last subject, or even all the juniors that I was going to talk about. But at least now we discussed some news, some companies, some ways to think about the risk reward and risk adjusted. And again, I think a good case is one where I think you should always be able to kind of do the fire and forget test, because in that case it's almost by definition a solid long-term bet. Because again, if somebody asks me, it's like short-term bets, I have no idea if Brixton is going to be up tomorrow, next week, next month, next 3 months. What I do know is that they have a lot of money to drill with, or for. They will drill, and nobody on this green earth can rule out the fact that they might hit a whopper of a hole if they use, let's say, 15 million to drill for up there. Because we know what they have hit, which is already very promising. We know that BHP is in, and they put in a second round for another drill season, which is coming up. So by definition, that BHP, not me, not the CEO of Brixton, BHP still thinks there's a shot of a BHP type price here. And then we can just, again, some common sense, look at the market cap of BHP and think, would they care if they saw the success here be worth 500 million? Is that what they're looking for? No. I think it's going to be very binary. Either they're going to find something very large, or it's not going to be enough, if you know what I mean. So it's kind of binary from that perspective. And the only thing I'm thinking about is is there a chance? Well, let's think of it like this. Might there be a BHP type price there, but they drill this season, put out, 15 holes. They they hit some. I mean, they have hit decent intervals, and then BHP walks away, whatever. And it's like that story is, Camp Creek at least is kind of killed that, BHP walks away, for example. Yeah, there's a shot of that happening, but again, at 50, whatever market cap is now, I would say a lot of it might be already underpinned by their, project portfolio plus their Ivanhoe joint venture. So I'm seeing like worst case from this valuation in the next year or so is like minus 50%. And then one has to think, okay, will they kill the project? What's the odds of them killing the project this year? I don't know. Is there a chance to kind of confirm the case? Yeah, kinda. So it's interesting. I mean, you have to play around, in my opinion, with a bunch of scenarios. So because in one sense, I mean, Inflection, for example, there's more like, okay, fire and forget, in the sense that, okay, they might test 24 targets, and at the end of the day, I think they're going to probably have something, sure, or at least have something worth following up, which I don't think the market is reflecting at all. In Brixton's case with Camp Creek, it might be more like a, binary, because, okay, it's expensive to drill up there. BHP gave them more money, they drill. What if BHP walks away? So in a sense, at face value, the Camp Creek story could theoretically be over after this season if they don't show any promise, or let's say they step out and don't hit anything, or BHP concludes that there might be something here, but it's not enough, whatever. It's like we don't see enough necessary signs to continue. It's like Brixton will have still a pretty hard time to, let's say, fund that themselves, and especially the signal value is not going to be great if BHP, after in 12 months, walks away after the round of drilling. It's like, what's the odds of another major, like, oh, if BHP walked, we're going to get in. I mean, could happen, sure, but so there's obviously, I mean, again, it's not like we're getting risk-free rewards here, but there we have to be open to the possibility that, based on, if we just draw it down to what we know, is that BHP put in another round of money, so they believe in this project still. We know that Brixton will drill, and we know they're going to put out news release. They're going to put up a bunch of assays within 12 months. We know what we're paying today, and then there's an infinite amount of scenarios that, I mean, it could be, best hole is 500 meters of 0.5% copper. Maybe they hit a whopper of a hole and it goes up, several 100%. It's like, we don't know. We just know that, okay, at 55 million market cap, for example, what's the downside? What's the chance of success? What's the upside? There's obviously also the thing with markets is that, like, I preach this a lot, that I prefer to get in after a discovery hole. I would say that they already actually have discovery holes. I mean, this kind, well, that's not even the, where's the actual, oh, I don't have it up now, I guess. Where did that go? Anyway, I mean, you saw the, well, shouldn't it be here? Oh, here, yeah, okay, here. So we know they hit like 821 meters, so 0.54. That's not a lot of juniors drill that. So it's like, this stuff isn't something you see every day. So it's, I mean, these, I think, should be considered discovery holes. So it's like, we know there's, a big porphyry there, kinda, already, because this is 1 kilometer scale bar. So again, I personally think the market is way too pessimistic. And the thing is, like, let's say it ramps up to 100 million and then assets come out and they're no good, really. So from 55 million goes up to 100. Let's say it drops to 55 million. You would, in that case, you would still not have lost any money from your bet. I mean, you could technically get out in that case if it ramps a bit. If it doesn't ramp at all, you still have a lot of padding to the downside via trap render or other projects which they can monetize one way or the other. And then there's also the possibility that they are really onto something, which at the end of the day, and maybe after this coming drill campaign, they hit a smoker of a hole or something, and the game is on, and it begins the journey to $2 billion. I mean, we don't know. That's the thing. Do I see that you have to trade a case like this? No, I don't think you have to. But it's like, if you buy now, let's say it, within 6-8 months, it runs up 100% on just drill speculation. Obviously, you have then the opportunity to, like, if you want to take some money off the table, etc. I just think at this particular price, I think the risk reward is way better than it should, because the return function is so high, and it's not like it's grassroots exploration. But as always, nobody knows the future, so we have to make an assessment at least. The only thing we know is price paid. And again, we know what BHP, the market cap of BHP, we know that they still like the project and all that. And I can't come up with another conclusion than 55 million Canadian is too cheap, based on the things we do know. But again, it's like, have a portfolio, a bunch of stuff, high risk, high reward stuff. I think you can still have the bets are so great that the reward side, that if one of these stories here work out, and say especially if we go into a hot copper environment, I mean, it's gonna pay for 10 other cases that goes to zero, basically. I mean, it literally can. I mean, if this becomes a BHP type price, I mean, $1 to $3 billion is certainly not out of the question. In that case, you would have like a 10, 20, 30 bagger on your hand in Brixton. And it's like, I'm not saying that's gonna happen. What I'm saying is that there's almost no chance of that happening priced in. So if you think there's a 10% chance, in that case, Brixton is probably a cheap bet. Simple as that. And it's like, again, like I always say, what I mean by no-brainer is not that I'm for sure gonna make money on this. Brixton might fail completely. They find nothing here. Ivanhoe finds nothing at Hog Heaven. Ivanhoe Electric finds nothing at Hog Heaven. That's what I meant. Maybe Inflection Resources, despite in my opinion, balance of probabilities that they probably are going to make some kind of discovery, maybe they don't. Maybe Altamira, despite the fact that they're adding on a second drill hole, drill rig, and obviously likes what they're seeing, maybe they won't, make a discovery. But the thing is, I have more cases than these, and I know that if any of these come even close to blue sky, and then you add the fact that the next big sentiment change is going to be to the upside, where pounds and ounces in the ground get revalued higher, I don't need to look right on many. Let's put it like this: if there were 100 Brixtons out there, I would be happy to have 100 Brixtons 1% each. If there was 100 Inflection Resources cases out there, I would be happy to have 100 different at 1% each. If there was 100 Altamira cases out there, I would be happy to have a portfolio of 1% in each of those Altamiras. 100. There is no chance in hell I would lose on that portfolio. BHP can't be that wrong, or Minerals can't be that wrong, or Anglo Gold can't be that wrong. That's my point. But you, again, since it's high risk, high reward, you protect yourself by not betting the farm on any one of these, because If you can find 30 high risk, high reward cases that are no-brainers, you should probably have exposure to 30 of them. Not just, you put everything in the best one according to you, which might still have a 70% chance of failure or whatever, or 50%. Because you don't want to gamble on that, given where we are in the sentiment cycle and what the long-term fundamentals are for these commodities, etc. I mean, you want to make sure that you're part for the A, next sentiment wave higher, and B, the foreseen shortages or deficits coming in many of these metals. You want to be sure you're on board for that. To bet everything on one high risk, high reward story, which may get killed just in time for the metal bull and the sentiment bull to go on a run. I mean, that's way too greedy. Yes, is it theoretical that some of these cases have 50 to 100 bagger potential? Maybe. It's like, that's not worth it at all. That's just way too greedy. Anyway, consider me biased. I own shares of all companies mentioned. I think Inflection, Brixton, and Altamira are banner sponsors as well. So consider me twice biased. This is not investing advice. You do your own due diligence. There's a chance that none of these work out. There's a chance 1 works out, 2 works out, or 3 works out. I don't know. I just think they're cheap bets. Too cheap. Anyway, thanks for listening. Bye.